Under the microscope, FX policies, or the lack of them, come into sharp focus this week in Eurogroup, Ecofin and G20 meetings. Is there any hope for peace in the currency wars? I'm joined by Darragh Marr, FX strategist, HSBC. Good to have you in the studio, Darragh. Is it going to be the topic in G20?
I think it's got to be. I think they're going to arrive along there. They're going to say, we're going to talk about growth, we're going to talk about inflation, let's sort all of this out. And they're going to talk about cooperation. But of course, currency wars just operates at the completely opposite end of that scale. It's kind of self-interest. And so I think it has to be broached. And obviously some countries feel more active in it than others.
And who does HSBC point its finger at?
Oh, we never point fingers, but I think the market as a whole has obviously been very focused on Japan over the last few months, and before that, Switzerland has been quite active. But the idea of being interventionist in currencies is not particularly new. They've been doing it for ages, but at the moment, because some of the bigger players are at the forefront, it feels like a much more pressing issue for markets.
But how can it end? I mean, what is the end game in this? I mean, it seems to be at the end of last year we were asking all the FX people, okay, what's the big story next year? Currency wars certainly up close to the top. What is the end game in a situation like this?
Well, I think ultimately you do need to get an understanding between nations that this could all be a bit self-defeating. We can't all chase to the bottom on this one. And you're beginning to get those kind of signs back from Japan. You had the finance minister on Friday. So I think that's part of the end game. And the other part, as will be on the agenda, is stimulating growth. If you can stimulate growth, then perhaps things don't feel quite so animated on the currency war front.
Where's that growth going to come from?
Well, policymakers will argue massively accommodative policy, but I got to admit at HSBC we struggle to see any major upswing in growth. China perhaps is the exception, that seems to be recovering, but in the G10 space certainly it's still below potential growth across the board.
All right, let's talk about a number of different crosses now. Sure. Actually, because we were talking currency wars, let's start with the yen. Your call on dollar yen is pretty bold. 80 at the year end or so.
Sounds very bold when you say it now, doesn't it? Yeah.
It sounds extremely bold now. Does it concern you when you look at it now?
No, because I think the story we have on the yen is a straightforward one. We think you've got a binary choice. Is the Bank of Japan, is the Ministry of Finance in Japan going to deliver on the promises? There's been lots of rhetoric, I would say little action, a 2% inflation target, but delivering it, that's the question. And we think ultimately when you don't deliver, the markets will say, well, hold on, why have you been selling it? 15 big figures, and then I think you begin to get that reappraisals and the undershoot of inflation. You see people buying back the yen rather than selling it.
Euro dollar, we've seen it pull back, of course, from these 15-month highs, and that seems to me, and people I speak to seem to say that that's perfectly justified, given the political context in Europe, given the economic context in Europe.
Yeah, I mean, I think we've got a forecast a year end of 135, so we're quite comfortable with it around this level. It doesn't feel quite so bold as yen. But I think, yes, there was a sense that perhaps we were getting a little bit too much upward momentum. I think Draghi's comments tried to stem that rise successfully. But it's interesting, the pullback was reasonable, but not very long-lived. We're already rebuilding some longs this morning, it seems, in the market. So I think the underlying enthusiasm for the euro is there, despite, as you describe it, the political situation in Europe and the economic situation there.
And you called sterling right last year.
Yeah.
And it doesn't look good for sterling right now either. What's your call on cable this year?
Well, interesting. We called sterling right because we didn't say anything. We just said it's going to be the same as the year before. This year it's different because this year we're saying there's going to be independent weakness in sterling. And of course the year, as you say, has started in a difficult way for sterling. The fundamentals aren't great. The fact is last year we had bigger distractions. We had Eurozone with the US fiscal cliff. This year they're less of a distraction, and the UK weaknesses are very much to the fore, and therefore people I think are reappraising the relative merits of sterling.
So where are you saying cable now?
We see all the way down to 152, and I got to admit, that perhaps doesn't sound too far away on a year view, but maybe some downside risk to that potentially.
And euro sterling?
Euro sterling up towards 90. I'd say that would be consistent with the euro dollar view. But what you've got there is an unusual euro sterling rising, cable falling. That's independent sterling weakness. We don't typically see that.
Great, Darragh, many thanks for that. Darragh Marr, HSBC. Now, our chart point today is Novo Nordisk, a bitter pill for the world's largest maker of insulin. The US authorities are refusing to license its new drug, Tresiba, without further tests. Novo Nordisk shares down as much as 12% in trading today. Just before we go, an upbeat outlook from the OECD for several economies. Leading indicators suggest the US and the UK are both firming. The Eurozone is stabilizing, but France remains weak. That is the very latest from the OECD. That's it for now. Join us every weekday at 12G for the latest insights on Market Pulse. I'm Axel Threlfall. This is Reuters.